In our market navigator today, we're going to look beyond the equity and tech markets here. Copper prices, that was the mystery that Kelly was alluding to. It's not gold, it's copper. It's had a strong start to the year, up about 15% or so in 2025. But will that continue? Our next guest says that with new tariffs on the table, we could see a copper rush, similar to what we saw with gold, a rush to bring in inventories into the U.S. before those import tariffs, potentially so, could kick in. So joining us now is Philip Strebel, the chief market strategist at Blue Line Futures. Phil, this copper trade is one that you've keyed on for quite some time now. This is one that's seen some good upside momentum. Is it able to continue, and for how long can it do so?
Yeah, I think so. I mean, it's one of our favorite commodities in the metals complex. It oftentimes acts as a leading indicator for inflation in the economy. And there's three factors that are really driving up prices higher. One, we've got the arbitrage. We've got the opportunity for traders who are shipping copper in from Asia. In South America, they're selling the futures contracts on the U.S. exchanges, and they're playing that arbitrage. So it's a window here where, during which that traders can kind of move the metal into the U.S. without paying the tariffs, and they're locking in profits. That's similar to what we saw to gold coming into December, most of January. And then you have the end users that are trying to secure this inventory. So U.S. copper consumers, they're locking in the inventories. They're bidding prices up here. So the request to take copper out of the LME in the warehouses in Asia, they've surged since Friday. So we got the biggest 4-day drawdown in inventory since 2013. You look at the demand side, global demand is expected to increase that usage by double over the next decade. Everything, and some of these have come off a bit, like EV vehicles. They use 4 times more copper than traditional gas. AI, the grid, renewable technologies. You got your constant demand, construction, infrastructure spending, and defense. And then finally, I think you look at the mining supply. Expanding and developing these mines is a lengthy process and a complex process, so it's tough to bring on supply. We just saw Chile. They just had their worst power outage ever, and also, it's going to take a while for that capacity to come back online.
Okay, so Phil, with that in mind, take us through, it sounds like you're bullish. Take us through what the strategy is.
Okay, so I got 2 things for you. The trade is really the May micro copper. We like it because of its size and scalability. Every penny move is going to be $25. We like buying the copper down at $4.50. So we got close here today. We'd say a stop loss below the recent swing low at $4.35. So you're risking $375. Our upside target is $5, which is $1,250. So it's got a good risk to reward ratio. And then finally, for an equity, we like Freeport-McMoRan. It's a U.S.-based copper miner that, has that price advantage by being in the U.S., has great margins, and it mostly mines gold and copper, so you get that benefit of both.
All right, there's the copper trade and an equity trade on the top of that. Phil Strebel, thank you very much. We'll see you soon.